She is joining in with a roundup of all the big headlines from the commodity universe. And Manisha, the biggest headline and the best headline for us is that Brent oil is below $70 a barrel. What's the latest?
Oh, well, yes, it's below 69 as well. And we did see prices fall below 68 at one point in time as well. So sharp declines coming in for the crude oil prices, positive for the Indian markets and major importers for crude as well, for that matter. 2.5% of a cut is what we've seen in the overnight markets. And with that, we are trading very close to those 3-year lows. We've seen levels of 68.6 on the lower side for the Brent prices. And for the WTI, the US crude prices, we've seen prices slip below 66 as well. So if we see another 0.5% of decline, then we are very close to those 3-year lows coming in back yet again. So if you look at the damage on charts, that does look quite severe right now. 2.5% of decline in the overnight markets. And with that, we are down 5% in the last 1 week. And the last 2 years actually have been negative for the crude oil prices. 23 saw 11% of a decline, 24 saw 3% of a cut. And in this year until now, we are down by 7% in case of crude oil prices. So after 2 years of decline, this is going to be a third straight year where we have started on a weaker note. And the way the matters or the factors are going, it does look like that this could be a weaker year for crude as well. Let me bring on those fundamentals for you then. To begin with, the U.S. crude inventories have continued to rise, and we are looking at the U.S. production hitting all-time highs in this year, with an expectation that we would be looking at 13.6 million barrels per day of a production coming in from U.S. The second point is it's not just about the non-OPEC countries. The OPEC countries also are looking to increase production from the month of April. The Russian sanctions, if that go away, you could be looking at more oil coming into the markets. And the third point really comes in about tariffs there. If tariffs do come the way they are coming in right now on Canada and Mexico and China, and then retaliatory tariffs that we are looking at into the markets as well, US also will be charging 10% surcharge on energy when it comes from Canada. So all of this is bothering the markets. Slower economic growth, weaker oil demand is what is keeping the prices on the lower side. But this clearly is a story about two different worlds. On one side, you have the crude oil prices, which fell by 2.5%. On the other side, you have the copper prices, which gained up by 5.5%. In the overnight markets, we're trading at a 9-month highs in case of copper prices right now, where support comes in from the possibility that US could be looking at potential tariffs coming in for copper as well. This is after steel and aluminum already have seen tariffs there. Apart from that, China has been buying very strongly, and China yesterday also said that they will be buying into tangible commodities, is the reason you've seen many of these metals continue to gain up. So even as the US copper inventories have been declining, the LME and the Chinese copper inventories have been increasing. With the kind of gains that copper has seen, we are up by 7% in the last 1 month and up by 16% in this year until now.
All right. Thank you very much for that, Manisha. We'll take a quick commercial break here. We come back.